While it was widely expected, the massive 51% quarter-to-quarter contraction in economic activity in the second quarter has tongues wagging. But what does it mean for you and me? We're joined by Newsroom Africa's Business Editor Xolani Mbanjwa to talk to us about the difference between the 5% annualized contraction and the year-on-year 17.1% drop in the second quarter. Xolani, thank you for your time and thank you for joining us on Weekend Dawn. So nice to have a face in the studio and so nice for you to take the drive to be here. Really appreciate it. So now, the GDP contraction is significant for South Africans, but take us through the sectors that performed poorly, taking into account that most of the country had a really hard lockdown between, end March, April, May, and a bit of June as well?
Jacob, we've been saying about, hard lockdown in April, May and June, which is the second quarter that we're dealing with right now. We've been talking about that, but, it's no wonder that, the economy has been doing badly, even without the pandemic. If you look at this graph here, when it comes to which ones actually performed the worst, some of them are actually the big employers when it comes to, the South African economy. That 51% annualized GDP contraction is actually, giving us a picture that, what happened in those 3 months. But, it's the lockdown is not annualized. So by the end of the year, we are not going to have actually a lockdown that was so hard as we saw in level 5.
And so things are picking up lightly now because the economy is slowly opening up.
Absolutely. But the same troublesome sectors that are actually labor intensive, your manufacturing, your mining, which were actually bad for the previous 4 quarters, actually, they did not do so well. So it's a worry that, it's 51% in terms of that particular quarter. And the third quarter doesn't bode well as well for the third quarter. We've seen this week already the June and July numbers in terms of mining and manufacturing performance. Although there was a slight pick up in annualized, data, it still shows that the third quarter, the quarter that we are in right now, we can expect that there's going to be serious trouble. So when it comes to, those major primary sectors, secondary sectors, they all tumbled by more than 50%. Mining was down 73%, but it was one of those sectors that was actually told to actually keep your doors open, especially the coal sector, because you supply a coal to Eskom.
Okay, so Stats SA releases all of this data over the past few days. How do the markets react to that? And obviously what was released by Stats SA, do we take that as the gospel truth?
We should, and things are much worse than they actually seem. We have not done enough, Jacob, as a country. We've talked about the 500 billion rand stimulus package. It's really not a 500 billion rand stimulus package. It hasn't lived to the headlines, because if it was, then it would be equal to 10% of our GDP, which it is not. But this 51% is among the worst, second quarter contractions in the world. So, it doesn't matter, the mathematics, how it's counted, it's multiplied 4 times. The 16.1% real contraction is multiplied 4 times for the 4 quarters for an annualized basis. But at the end of the day, the economy is not doing well. For you and I, it means that those who have lost jobs are unlikely to actually get some of their jobs back. And, the standard of living is, diminishing a little bit because we've seen that GDP per capita has gone down. So for you and I, it means that now is the time for the private sector and the government and civil society to actually do something right now about the structural reforms that we need and economic policy that is going to actually work.
Okay, so year on year, the economy shrank 17.1% in July. What's the difference to the 51% figure that was recently released? Because that's why I was saying, should we take this as the truth, as the gospel truth?
Potato. It doesn't change the fact that things are bad. But someone who actually put it quite well is Isaiah Mhlanga at Alexander Forbes. Let's take a listen to what he had to say earlier this week about the differences between that figure and how it's calculated.
All right.
But I think it is silly to annualize numbers in the middle of a depression because numbers are going to be very volatile. But also, if you take into account that in April and in part of May, we didn't have the ability to travel much more easily. And as a result, there is data imputations, which SSA has to do because some economic activity were completely shut down. So this data is subject to revision going forward, simply because of the times that we are in. Sometimes percentages, they conflate the numbers. Let's just talk in rand billions. What does this mean? The economy contracted by 512 billion in the second quarter compared to the first quarter, which is more than the fiscal package which National Treasury puts together. So what it means is that fiscal package merely just offset the contraction that we saw in the second quarter. For the recovery, we need a whole new fiscal stimulus than the 500 billion that we provided with.
Xolani, let's quantify this now. How much money is actually involved here with the economy contracting? Are you able to quantify that in monies?
In that particular clip, that's exactly what Isaiah has done, to say that, figures 51%, 17%, 16%, yes, it doesn't, really put a real picture in people's heads. When you talk about the money that has been actually lost, 512 billion rand in contraction when it comes to the economy. That's more than that stimulus that was announced.
Yeah.
And this stimulus is really, when the calculations have been done, you really find out that new money is actually 193 billion rands. The rest of it was just reprioritizing, taking from Peter to pay Paul. And we know that there have been relief funds that are out there, but some of them are actually steeped in corruption claims, as you've heard, when it comes to IF, TERS, and the others. So we have not covered ourselves in glory, but we need a stimulus package, right now. We need to actually have some headline-grabbing, economic policies, and right now, and to actually live up to the hype that, we're going to do something. At this present moment, we haven't done anything.
Okay, so now we're in level 2 of the lockdown, right? And we're getting into the third quarter. How is the economy performing now? And do the prospects look a little better?
A little better, absolutely. When you look at the manufacturing and mining numbers that came out on Wednesday for the month of July, you actually see that, there's an uptick, and these sectors actually employ a lot of people. These two sectors are not what they used to be in the past. In the early 90s, early 2000s, mining and manufacturing used to contribute massively in the GDP of the country. Not anymore, because some mines have closed down, but mining sector is still a sunrise industry. Manufacturing can still be saved, although due to cheap imports, it's actually been, dealt a huge blow over the years. So in the third quarter that we're in right now, we're seeing the economy opening up. We're seeing some sectors opening up. Some people are saying it's not enough. The event sector, they went on a protest earlier this week, two protests this week, to actually call for them to actually go back to hosting events. So things are not looking that good, and when you look at the entire year 2020 in terms of economic performance, there's a downward revision of how well the economy is going to perform. At the beginning, some people were saying it's going to contract 2%. Right now, the same people are saying 9%. The finance department, the Treasury, is saying that in the worst case scenario, we could see the entire 2020 year contracting by 16%.
Whoa. Okay, so Monetary Policy Committee, that happens next week. We've already had 275 basis points cut this year alone.
So it's actually 300 basis point cut.
Okay.
If you factor in the 25 basis point cut that was given in July, and that takes it up to 300 basis points, and the repo rate, it takes it to just above 3%.
So is there going to be another cut next week, yes or no? And if so, why do we need another cut? Because it's quite a lot.
You have to stimulate the economic activity, for businesses to borrow money, for you and I borrow money, spend. That's how things are going to work. The Reserve Bank did say, after they had cut by 275 basis points, that there's still room to cut by 50 basis points, and then they cut by 25 basis points, which means there's still room for 25 basis points. But many economists are actually in support, and analysts are in support of a cut, just differing how much it is. But, you can't spur economic growth alone through those particular measures, Jacob. You can't, use that particular, when it comes to the repo rate. You can't use it. We need those structural reforms. You need to speak in one voice when it comes to the mining charter, the land question. There needs to be no policy uncertainty, But at the present moment, we are not doing enough in order to stimulate confidence from within South Africa. South African private sector and consumers as well are not feeling so great. So we need something that is going to boost, confidence. And it's not happening right now. Even if we were to cut by 50 basis points or 75 basis points, it wouldn't be enough to save this economy. We still need structural reforms to actually do it.
Just quickly, before I say goodbye to you, Xolani, when do you think this economy will fully recover from the disaster that was 2020, specifically under lockdown?
At the beginning of this crisis, I said in our lifetime we are going to, those who are alive today, in our lifetime we're not going to actually see the economic growth that...
Wow. And
I was taken to task for that. So I have since revised. I think we might go back to COVID-19 or 2019 figures, which were not good, by the way. We still saw contraction in 2024, 2025. And those who actually do this research are saying 2023 to 2024. So it's going to take a long time before this economy, and that's if we do the right things.
And that includes another basis point cut, 25 basis points. Is your prediction, I'm gathering?
I am hoping for it, but I think there's going to be a hold on interest rates come Thursday next week.
All right. Xolani Mbanjwa, thank you for your time. That was Newsroom Africa's business editor, Xolani Mbanjwa, telling us about the prospects of the Reserve Bank's Monetary Policy Committee meeting taking place next week. All eyes will be on that.